talk food commodities as prices for wheat and corn continue to soar. Companies that make agricultural equipment are poised to benefit. One example is Agco, the second largest U.S. maker of tractors and other farm gear. Senior markets correspondent Julie Hyman is at the Business Council meeting of CEOs in Fort Lauderdale, and she joins us now with the CEO of Agco. And as you mentioned, Julie, I did get the short end of this stick. I was in Chicago at the Business Roundtable event, and you are in sunny Florida. Good to see you.
What can I say? Good to see you too, Lisa. Thank you so much. And again, I am joined by Martin Richenhagen, who's the CEO of Agco. We've talked a lot recently on Fast Forward and on Bloomberg Television generally about food inflation. Talk to me about demand that you're hearing about right now from your clients, especially since I know that your forecast for the rest of the year is perhaps not what analysts were expecting, but at the same time we're seeing crop prices go through the roof.
And our stock price was up $2 yesterday. So
well, and it's been up considerably over the past year as well.
Actually, I think while we speak here, we add 156 people to the world population. So the world population is still growing. And what I believe is that for the coming years, the demand will be much higher than supply, which inventories are low, which means prices will go up. Prices for food will go up, and that shouldn't be. This certainly is a fact. And still, only a very small percentage of citizens is spent for food. So I think everybody can afford it, with the exception of some of the emerging markets where people need help.
Now, you said that prices are going to be higher for crops. You've also said in your conference call following earnings that prices for your products would be about 2.5% higher.
Yes.
To account for things like steel that go into making your tractors.
It's mainly steel, rubber, hydraulics.
Is that going to be enough to make up for that increase?
Maybe not. So we are thinking about that maybe we need a little bit more. So it could be that we have to add 1% or something like that.
Now, as I mentioned, your forecast was a little bit short, at least compared to what analysts were expecting. Yeah. What accounts for that?
Well, a little bit how we do it. So under promise and over deliver. So we try to be conservative, but also the footprint of the company. So we do about 70% of our business outside America, 50% in Europe, a lot also in Eastern Europe, and those are the markets which are right now a little bit more difficult to predict.
And so, what you can predict, tell us right now what you expect in terms of recovery of some of those regions.
Yeah, I think we will have a good year. We see already better order books in Europe. Brazil seems to be stable. It's going down after a record year, 2010, still on a very high level, and North America is pretty good.
Just a quick question here. I'm curious, you talk about $270 million of free cash flow for 2010, which you're reinvesting. Just very quickly here, any talk of reinstating your dividend?
Well, this is something we certainly need to think about, and we do that every quarter. I wouldn't be surprised if we would do something like that sooner or later.
Okay, thank you so much, Martin Richenhagen, for joining us to talk about your business. Lisa, back to you.